Felix here. Is it all over for Meta, or is this the time to load up the truck with incredibly cheap shares? That's what we're going to answer in this video. What we're going to look at stock price movement. We're going to look at fundamentals, the market share, where it's heading, who the competitors are, and everything else. This is a deep dive. If you are allergic to data, run. This is your chance to do that. None of the following is, of course, financial advice. You know that by now. And let me look at the stock chart here. So this is the kind of misery chart that we're seeing with a lot of big tech. We are down 62 percentage points here since the August 2021 highs. Why is that? Well, part of the rally going up was kind of this assumption that we would live in COVID land forever, and that therefore everybody would do everything online. And all of these kind of tech stocks that are essentially online businesses benefited from that. And everybody thought, well, all advertising is going online immediately. It'll never go back to anywhere else. And of course, that wasn't quite the case as we're coming out of it. So what we're looking at here, well, this is essentially a beautiful, very beautiful, I think, summary of what the business is actually all about. So that who made this economy app on Twitter. And what you can see is, okay, the revenue is all advertising. This is an advertising business. This isn't really a tech business. This isn't really something, .com-y or anything like that. It's just a plain old advertising business. Meta is $500 million, everything else 200 million, completely irrelevant at this point. So where is it going? Well, there is a cost to acquiring that revenue of 5 billion, leaving 23 billion left. Gross profit, that's an 82% margin. That's pretty staggering. We will compare this to Google and Pinterest and everybody else out there in a second. Then there are operating expenses. So that's just, Zuckerberg's driver, his limo, his coffee, that kind of thing. I'm kidding. Obviously, the tens of thousands of people who work at Facebook and keep the lights on. And then they've got admin expenses. That's also basically that. Sales and marketing is the good stuff. How do you acquire customers? How do you get more advertising revenue in? How do you get more people to move from other platforms to yours, or from offline to online, and so on? R&D is making stuff better, making sure you stay ahead of the competition, and don't let TikTok eat your lunch. And then there's a little bit of taxes, very little. I love the American tax system as a shareholder. And then there's a very juicy net profit of 23%, 6.7 billion. They have about 12.5 billion cash in the bank. So that all looks pretty good, right? So why then the misery? Well, this is one thing that I saw posted that some people say this is why Facebook is a dangerous business. Let me just move this up a bit more. So Facebook down here in blue, people are saying, look, their business is all ads. 97% of the business is ads, as we just saw. That's incredibly dangerous. Google is 88% ads, the closest competitor out there, but they still have more other stuff. Microsoft is incredibly diversified with Office, Azure, Xbox, Windows, bit of ads, bit of Surface tablet. And Amazon has, AWS and then Amazon, but actually AWS is much bigger because it's much, much more profitable than selling stuff to people. So people are therefore looking at that and going, ooh, Facebook, very, very dangerous. Right, then, so what is actually the business? Well, the old business is Facebook, Instagram, WhatsApp, and Messenger, and that's very, very profitable. The new business, the new sort of like potential business is Meta, which is the headset. I've got one lying around here somewhere. I used it a few times. Actually, very, very interesting, very exciting, really fun. Maybe I should do a giveaway and send it to somebody because I've used it twice and I'm probably never going to use it again because I don't play games or anything like that. At the moment, the content is fairly limited. Now, this is from my friend, what's his channel? Stock Market Nerd on Twitter. Subscribe to his newsletter, Stock Market Nerd. You find him. He puts out these really, really great news stories. So before we go into the good news, I'd like to do a bit of a brief comparison. So I put it into our stock tracker here: Meta, Google, Amazon, Pinterest, Twitter, and Amazon again for good measure. And all you got to do is put those in here, hit the update button, and then it pulls out the data for you from sort of thin air, and you get to see gross margins and everything. I'm just going to cancel it because we don't need to really see the other stocks. And I'll zoom in a bit more for you so you can see what we're talking about here. I'll be allowed to zoom in some more. Here we go. I think you can see that reasonably well. So gross margin, 80%. Better than Google, better than Amazon, better than Pinterest, just better than Twitter. Operating margin, 33%. Better than Google, far better than Amazon because Amazon has warehouses and everything. It's an unfair comparison. Far better than Pinterest, who haven't really done very much yet on that front, and Twitter loses money. Return on equity, what does that mean? Well, you give a company, as a shareholder, $100. How much do they make for you every year. Meta makes $26.50 for you every single year. Google makes $28. That's pretty similar. And then Amazon, Pinterest, Twitter. Well, Twitter loses money. Free cash flow. Meta has about a 30% free cash flow margin, which is incredible. So they bring in $1 billion, they keep $300 million. Very nice. They don't need to raise funds. They don't need to issue debt. They don't need to dilute US shareholders. Not necessary. So from a price over free cash flow metric, it's really cheap because their free cash flow is really, really phenomenal. Why is that? Because you pay for advertising basically upfront or like on the spot, and their costs for running an extra advert are pretty negligible. So from a PE point of view, it looks cheap at 12 compared to everybody else in this sector. I don't pay much attention to that, honestly. PE is a pretty useless metric. What I look for more is sales growth, earnings per share for the last 5 years. Takes into account dilution. So if you're in a growth stock, that's important to look at particularly. 31% earnings per share growth. So this company has grown the profits per share that I own, and I do own Facebook, or Meta. I also own Google and Amazon, so I should put that out there as a disclaimer. 31% growth. That's pretty solid, right? Stuff that grows at that level is pretty impressive at the kind of revenue level you're looking at. Institutions own 75% of Meta. That is good because they're a little bit more sticky, and it also tells you that you're not super wrong. Here it is, because 75% of the market thinks the same way as you do. Google 78%, slightly better. Pinterest slightly better at 88%. People see a little bit more opportunity there, perhaps. I'm not quite sure why. So steady business, I would say, from these numbers, right? Nothing to complain about. If you want to do these kind of comparisons or put your whole portfolio in there, here, I'd encourage you to do that. Go to felixfriends.org/Patreon. Links down below. It's part of the Patreon. It's about 20 cents a day. Join us for the year. You get an extra month off as well. It's a really, really useful tool to get a quick snapshot for what's going on here. So let's run through a little bit of news here of like, is there any growth left? So what people are basically saying with Facebook, look, they've done everything. They've got 3 point whatever billion users. There is nobody left who hasn't got a Facebook account. So how can they possibly grow? Right, here we go. For example, they are... Meta led every platform by wide margins in terms of percentage of adults who use the platform to buy a product. Meta has managed to make people buy stuff. And that isn't just thanks to first-time commerce, but also their marketplaces in the family of apps. Snapchat comes in second. TikTok is still far behind. And that's also because TikTok is at a stage where they're not really monetizing yet. And you might remember the good old days of Facebook. Everyone's like, how are they ever going to make any money? Why are they not making any money? And then one day they brought on board somebody from Google and started adverts, and that's when they started to really make money. In Europe, they are launching a pretty significant advertising campaign to basically get more people into the metaverse and show the use cases that it isn't just gaming. It is, examples here, med students practicing surgeries, friends from around the world playing touch football. McKinsey thinks there's $1 trillion market, and we look at that in a second as well. So that's why they're really spending here very aggressively. And here is another platform they have, WhatsApp. Most of you probably have a WhatsApp account. I certainly do. I chat with some of you guys on WhatsApp. In India, Meta acquired Jio platform, well, 10% of it at least, in 2020. And that's a grocery shopping platform, essentially. And now you can buy through your WhatsApp platform your groceries. So you can get your cart filled that way. In one click, you can send it to the store, confirm the address and payment method as well. So that's pretty cool, considering that WhatsApp isn't monetized at all. That's a fairly low-hanging fruit. But this isn't the sort of Meta is amazing. We kind of want to look at this independently. So Meta has about 300 million users. This is April this year, 300 million. Versus TikTok with 94. Now, there's obviously some duplication with Facebook and Instagram, so your number isn't probably quite as big, but at least it's 180 million. It's twice the size of TikTok. Snapchat comes in third, Pinterest after that, and then LinkedIn, Twitter, Reddit. LinkedIn, by the way, I think it's a brilliant business, and Microsoft obviously owns that. They reach 3.6 billion people each month. And if you're thinking about advertising, what do you want? You want to reach the widest audience for the lowest cost per click or cost per impression possible. Where do you go when you advertise? You have two choices. You go to Meta and you go to Google. And probably you go to both. And that's pretty much it. Those two absolutely dominate the advertising industry, not just in the US, but everywhere in the world. And Is there an opportunity for Facebook to still grow this? Well, WhatsApp certainly is. Messenger is monetized. Instagram is monetized. Facebook is monetized. WhatsApp isn't. So that's kind of the low-hanging fruit. Really, 2 billion active users, and you could reach them directly into their phone. You know what they're doing, you know where they're going, you know what they're buying, you know everything about them. So it's an incredible opportunity. You could create a marketplace in WhatsApp, and WeChat, I think, is probably the model that they're kind of following, because that's sort of who they've been copying, which is the largest Chinese chat app out there, which has in it content, news, videos, shopping, payment, flight booking, train booking, everything you could possibly ever want to do in the Chinese space, you can do it through WeChat. In fact, it's quite hard to survive without it over there. So I think that's the opportunity for WhatsApp. The whole Meta thing is obviously at this point, a pie in the sky thing. Like, we just don't know whether that's going to turn out that way. But if you think about what it looks like when you search something on Google, and Google owns the internet, right? Google is the internet. So if I search for, say, Meta and go to Google, this is honestly what the search results looks like. Tell me that in 10 years' time, this is what it's still going to look like. Come on. It's got like 2 lines of text, a bit of blue, and a couple of teeny tiny pictures, and then that's it. That can't be how people wish to consume content, really. It's just not visual. It isn't like, it doesn't link me from one to the other. There is no kind of community engagement. I don't know if people who regular search this goes to look at other stuff. There is a gazillion ways I think this could be made better. Now, Google does it very simply. It's very clean. It's very nice. But it's kind of created by some sort of, data engineer in a basement somewhere. Well, probably a swanky office in Google land. But I think there is an opportunity to make this into a more real world, a sort of virtual world. And I think that is something that there has a demand for it. But I might be wrong on that. Now, if I'm wrong on that, what's Facebook worth? Well, I still think it's worth quite a bit, because they have about a quarter of the US advertising revenue collected, and I can't really see why that would significantly change. So if I as a business were to advertise, where would I advertise? I'd advertise on Facebook, I'd advertise on Google, and you might then possibly advertise on some, Apple platforms. On Amazon, you're only going to advertise there if you're selling on there typically. So that's a bit more of its own ecosystem. So really, that's the competition. TikTok so far doesn't really offer all that much. Plus, the audience is certainly a different one. Yes, Facebook isn't the trendy space for like young kids anymore. But who's got the most money? Well, actually, it's typically the people who are a little bit older. Yep, young people have relatively high disposable incomes. If you want to sell, an iPhone or something, then that might be great to do that on TikTok. But say you wanted to sell them financial services or something like that, TikTok probably isn't this place you'd go, because those people are not in that frame of mind. So I think there is a place for all of these guys, and I don't think Facebook's going to go anywhere. Now, do watch out for their margins, watch out for their free cash flow. If that sticks around at 30%, they're doing the right thing. The Metaverse is rumored by Bloomberg to hit about $800 billion. McKinsey, I think, puts it at $1 trillion. And that's why they're spending so hard. So if Facebook manages to get 20% market share of that or something, then they're going to get an extra 160 billion revenue from spend, at least from the ad spend. So there is a potential here. Is there a risk? Yeah, there's always somebody snapping at their heels. But with the size Facebook has, it's fairly hard to overtake, I would say. Plus, they can just acquire stuff, right? Yeah, TikTok's definitely one to watch. But there's going to be regulatory and political issues with that, I suspect. And Facebook's very blatantly copying all the features, right? All the reels we're seeing on Facebook and Instagram, that's obviously from TikTok and all that kind of stuff, stories being very, very important now. So when you have 3.6 billion active users, you can just shove stuff in front of them that you learn from others. And it's much, much easier than having to start from scratch. So I wouldn't write them off. I think from a valuation point of view, if you were buying Meta a year ago, I can't see why you wouldn't be buying it right now, but obviously come to your own conclusion on that. Is it going to go down south a little bit further? Well, ad revenue falls, ad spend falls when we are in recessions, and we're kind of heading that way. And that's also part of the reason the stock's down. I think it was probably a little overcooked during COVID times, and I think now it's probably a little undercooked. That was my view on that. I'd love to hear what you think of that. I've rambled on for long enough. Let me know in the comments what you think. You think Facebook's all over? Do you think it's a value buy at this point? I'd love to know that. I also have an options trade open on Facebook as we speak. Actually, I'll show it to you. There it is. No, that's the wrong one. Meta, here it is. So I set up a trade where I would make money between $140 and $180, and we've come down quite a lot, obviously, here. But so far, it's looking pretty good from a technical point of view. No real complaints here. So these are the sort of trades that I do from an options point of view. That'll trade will make about 5% or so. So it's essentially, I wanted the stock to stay between these two green lines, and we've obviously moved down quite a bit. That happens sometimes. So either we adjust or we exit early if it goes down further. But that green line here wasn't there randomly. That's essentially the support we had in March 2020. So we'd have to literally hit COVID levels for this trade to start losing money. So these are the sort of trades that we do. They are market neutral, essentially, can go up or down very significantly, and we still make money. If you want to learn some more about that, come and join the community. The Master Options course is there for you. We also have other programs out there, but felixfriends.org/options is where you go. 41% off is the coupon code Build Wealth. You can literally join about 2,700 students so far, and we are growing that community. Our intention is to get that to up to 100,000. Yeah, we literally want to be an enormous university empowering people to be independently wealthy, build long-lasting intergenerational wealth, build that separate income stream, and have fun with it. So felixfriends.org/options, check it out. Thank you for watching. I appreciate it. See you on the next one.